Hello, welcome to successfultradings.com, and today's video is going to be about how to generate a chart of your option contract within Power eTrade. So the first thing I'm going to show you is how to do it. Then I'm going to explain why you do it, and then what benefit you are going to get out of it. So without any further ado, let's go ahead and dive in. Okay, so here's my screen on here. This is what we're talking about. This is, if I remove this, I put it in full screen on here. So right now I'm looking at this contract. IWM May expiring on Friday, 131 call. I actually had it. I had those contracts this morning, and the benefits of having this, I'm going to talk about it later, but I'm going to explain. And so before I do that, let me go ahead and show you quickly how to do that. So let's move this up here. Let's move this up there. So we said yesterday in a video that the way to do that is simply by coming, when you have Power eTrade, obviously you go to the option chain section and you just click here. So, and then click on charts and it shows up. So you can do that for any one of the position that's of any one of the on any stock, ETF, whatever, and the strike that you will like, it will generate a graph, and that graph, obviously, that charts, you can trend it over, I don't know, 10 days. For me, typically my setting here for the last 3 days, so I want to see the history of it. So why am I doing that? Because we spend time as traders charting the stock itself or the ETF, whatever, the underlying, right? Well, my friend, we are not buying that. We are actually buying or trading. We are trading the stock all the time, but really what we are trading is the specific contract. There's a relationship between the two, but there's hidden relationship that exist between the underlying, aka the stock, and the option itself. So the option has other parameters. The Greek comes in, other things, volatility come in that the market makers do manipulate at will. So you want to somehow have a good understanding of, okay, how does this chart work? Just like any other chart, I have volume on there. Yeah, I want to know when a lot of volume coming on a contract that I'm trading. That's usually bullish. If, let's say, those are buy. I want to know when it's a little bit extended, meaning that the relative strength for that contract is too much. Example in case this morning. Woke up this morning, this closed yesterday at 95 cents or $95 if you want it full value, and the open this morning at what was the open? 285 or something. Well, my friend, that was not going to last. That's super extended. So what am I going to do? I sold my contract, took profit right here. I took profit. Yeah, so that's the benefit of that. Absolutely. So you want to take profit when, let's say, it's extended, and then when it finds support, like here, somebody on our Discord room was actually asking, "Oh, is it okay now to get back?" Yeah, it was okay somewhere here, just to find support off of the exponential moving average. Is that the 50? Yeah, the green one, and now it came back up. So you bought it here at $1.26 or whatever, $1.30, whatever. So the low was 126, the close was 158, and then you could have already made $100 out of that. So that's really the reason why. So the other reason, that's my good friend Peter in the Discord room mentioned this morning. He said, "Oh, how I keep on finding those cheap contracts, because this very one, the 5 cents contract, they were worth 5 cents, I think, on Friday, and this morning they pop at 25 cents. Yeah, but we want to make those type of trade. Let me maybe show you another example. It works really more than we think. Let me go ahead and just open up another example here for you. I'm saving these screen captures now because they've just to show the traders. So yesterday was the 27th, right? So what did we trade yesterday? The QQQ puts. Oh yeah, those were a good example. Let's bring them up here. Those were a good example. So these QQQ puts, they actually they were worth not that much yesterday. 70. Well, no, something 70 cents. But my point on here, what's getting me to here? Look at the relative strength. they are oversold, meaning they were cheap. They were cheap. And then this guy had, QQQ had a large print, equity print at 215. So for us, something like this is a signal. So we got in somewhere here. We bought them at 69 cents. That's why we captured the screen. I think earlier today, they were going for $1 or something. So yeah, so I'm hoping that you got something out of this video. Thanks to Mr. Evan from the Discord channel at Successful Trading, who encouraged me to do this video as a standalone, obviously, since we put it in yesterday daily market recap. So number one, how you do it. Number two, why you are doing it? Because you're trading that's the instrument that you are trading more than the stock itself, the underlying itself. And number three, to be able to give you a good indication on exits and entries of your contract. Thank you for your time. Hope we see you soon on Successful Tradings. Bye-bye.